What's up, everybody? Welcome to JMac Investing. This one we're going to be looking at Acorns, which is coming public via Pioneer Merger Corporation, ticker symbol PACX. Let's get right into it. Hope everyone's doing well. Like I said, welcome to JMac Investing. If you're new around here, we focus on all things investing. A lot of the focus is on SPACs. SPACs are special purpose acquisition companies that are created and they come public with the sole purpose and intent to bring another company public. They're blank check companies. We're going to do a quick review over a recent announcement that I feel like has been completely overlooked, and this is a great opportunity in my humble opinion. And so we're going to talk about it. We're going to go over Acorns, which is a investment platform. Essentially, you add a couple cards to the platform and you can invest your spare change. So if you buy something for 75 cents, you can round it up, and 25% you would invest 25 cents. Whatever the difference is on each purchase to a dollar. So if it was 40 cents, you'd invest 60 cents. So that's how it works. Then you can also do daily, monthly, or weekly investments. So you could turn on and schedule daily, weekly, or monthly. So you could do $100 a month, or you could do $10 a day, $1 a day, whatever you wanted to do. And then you just set up your investing strategy. Like if you want to be very conservative, moderately conservative, aggressive. So you make those selections, set it up, bam. It's like the easiest thing in the world. It's kind of funny. I recently did a video kind of reviewing the platform, which I had never done an Acorns review, but I've been using it. Well, my wife has been using the platform for going on about 2 years, so I figured our experience of using it for 2 years, I would do a video on it, not knowing that it was going to come public via a SPAC. I'll link that video down in the video description below. You can go check it out if you want to see my review of the platform. You can also sign up for Acorns with my referral link and get $5. We'll get $5 as well. So consider doing that, and I appreciate the support. Also consider picking up some free shares with Moomoo, WeBull, or M1 Finance. You can sign up and get, I think they're doing a $30 bonus right now. All those links are down in the video description below. Also consider joining the Patreon group, where we have a private Discord. I share my portfolio. I share my buys and sells in real time with the members, and also you can review my portfolio, my ETFs, my dividend stocks, all my SPACs, all my warrants, etc. So consider doing that as well. Patreon.com/JMac Investing. Here we go. So Acorns, the largest subscription service in consumer finance to become publicly traded company. I did not know that they had the largest subscription service. We'll get into some of that as well. They got 4+ million loyal everyday American subscribers, expected to grow to 10 million by 2025. So the transaction assigns Acorns with an expected pro forma fully diluted equity value $2.2 billion. That's the estimated valuation of the company at merger. So the transaction is expected to close in the second half of 2021, and after merger, the company will operate as Acorns Holdings Incorporated and is expected to trade under the ticker symbol OAKS. OAKS. Acorns recently acquired a company called Harvest, and basically what this particular platform does is Harvest has helped earn back more than $5 million in bank fees and interest refunds for thousands of customers, averaging more than $120 refunded per successful negotiation. So they negotiate to get bank fees and interest refunds for you. Here's the platform. Get your bank fees and interest charges refunded. This again is something that would be easily adopted, since really you just sign up and then you benefit by signing up, by getting those refunds. Also wanted to point out that Acorns here, as you can see, they have 75,000 followers on Twitter. They have big followings on Facebook and Instagram as well. So this is a pretty well-known company. This isn't like many of the other SPACs where when they announce they have like 300 or 400 followers on Twitter. So this is a legit company. Not only that, they also are partnered with CNBC. Yeah, you heard me right. Right here, if you go to grow.com, which is a partnership with Acorns and CNBC, you see this pop up says sign up for Acorns. So this drives membership right here. So here on the Grow About Us page, you can see Acorns plus CNBC. You saw my thumbnail with the clown Jim Cramer. That means he will likely be promoting this, which is the hope and the goal, that he'll be assisting us with getting the word out about Acorns. Another reason, semi-catalyst, not an investment thesis or catalyst, but you know, these kind of underknown companies, which like I said, I think Acorns is a pretty well-known company, but many times SPACs need a little bit of promotion. They need someone to help get the word out. And if Jim Cramer talks about it, you can best believe that it will jump. This could be quite a bit of exposure that they get just from the CNBC, which is the main sort of, or cable TV platform to get, you know, for investments and investing. So that's pretty huge in and of itself. Let's get into the investor slide deck. All right, so here we go. Here's our slide deck. Grow Your Oak is their little slogan. And here is their subscription growth, which I think is super impressive when you look at it. You know, whether the market's up or down, good or bad, they keep growing subscription, paid subscribers each and every quarter. But they do have plans, as I said, to grow to 10 million by 2025. So massive expansion on the horizon. And the nice thing about it is when you look over some of these demographics of their user base, there's, you know, a wide variety of ages from 18 to 23 to over 50, and it's a good amount of younger people on the platform, but again, even a lot of older, well, middle age and above are using it as well. A good split on the gender and household income as well, from under 25K are using it to some people with household income over $150,000 a year. Total monthly retention at 98%, very, very strong here. And it shows after 12 months of use, 79% retention. So if they add 100,000 users, the 80,000 of them after 12 months stick around for the next 5 years, which is incredible. As I said in the beginning, you can do one-time deposits, you can do recurring deposits, you can do roundups. They do have different tiers of the service where you can just use the basic investing account. You can do Roth IRAs. There are retirement accounts. You can do custodial accounts. You can use checking accounts. So it's really becoming a serious financial platform, not just roundups and investments. It's really becoming a full-fledged platform. Really good branding, like I said, with CNBC as a partner and other brand advocates like Dwayne "The Rock" Johnson, Ashton Kutcher, Alex Rodriguez, Jennifer Lopez, big names here that are advocates of this platform. And here again is that I was touching on, that the subscription-based model. You can just start with $1 a month, and like I said, once you hit about a couple $1,000s in your portfolio, the dividends will pay for the platform itself on the $1 tier. You'll be already making more dividends per month than you'll be paying into to utilize the service. They do give a brief overview here of how they generate revenue from the subscription revenue model, and then the non-subscription revenue model, which is they have a debit card where you transactional revenue from debit card, interchange fees, brand partnerships, and bank fee negotiations. And just blowout numbers here on the revenue growth. So from 2019 to 2021, it went from 44 to 71 to 126 million. Projected 207 million in 2022 and 309 in 2023. Look across the board, it's fit between 50 to 75% growth annually. So real quick, my take on it is the valuation on this is very fair. This company is going to expand and grow just because of the digital expansion in the financial markets. So this will be a great beneficiary. I'll definitely begin to buy some warrants, and I will continue to add. As it's right now staying low, if you look at the share price, it's still below NAV. It's like $9.96 right now. So anyway, guys, I hope you enjoyed the video. Hope you are enjoying the content. Expect much more to come pretty soon with some new announcements to come as well. So that's all I got. Till next time, I hope you guys enjoying the content. Subscribe, like, do all the things. Get the stocks below. And sign up for Patreon, patreon.com/JMac Investing. That's all I got till next time, guys. Doses.